Welcome to this post-election day edition of the BullHorn. I'm here with Howard as usual. And Howard, what's up with cable stocks? Time Warner Cable, Cablevision, Comcast, they're all near their 52-week highs, but they're loathed by consumers. I think you could argue that cable companies are hated more than politicians. What are people on the stream saying about the momentum here?
Listen, you've got phenomenal programming right now on companies like HBO. And even the reality shows are actually trying a little better. There's one Build a School. So, listen, Cream has risen to the top. Netflix, Apple, the search companies, Facebook, those are our new cable companies. But these guys are just getting dragged along. They have great cash flow. For those hedge funds and institutions that can't buy Netflix, they're chasing cable companies.
Right, good point. So, it sounds like I think investors should definitely be wary of the cable companies. It still is that kind of old media business, if you will. If I may, though, a plug for DirecTV. I am a very happy DirecTV subscriber, so, pleased to see that stock also at a 52-week high. Hooray, Sunday NFL ticket. Moving on, another area where people probably need to be wary. Takeover rumors in tech. Every day it seems like there's another one. The latest, Rackspace was up on this notion that Dell was going to buy a cloud computing company. And guess what? Dell did, but it just wasn't Rackspace. It was this private company that few people had heard of. So do people still, should they be sticking with Rackspace on the hope that someone will buy it, or is this just a fool's game to be trying to find the next takeover target?
Listen, it's a highly discussed subject on StockSwitch.com that the cloud is a trend that is here for a long time. Bids are being made. Technology wasn't invested in from 2001 to 2005. We're seeing the result of that as companies scramble to replace R&D with acquisitions. This trend is difficult to predict when it'll end.
What cloud companies would you recommend, if maybe not necessarily Rackspace, companies that do have strong fundamentals and aren't just getting that takeover froth?
I own this company. It's pretty much a smaller cap company, TMRK. Also, more in the government space, but in the cloud space, stock hit an all-time high over the last couple of days. Again, I think this market continues to surprise a lot of people to the upside. And clouds will have vicious pullbacks along the way. There is no perfect investment sector.
Right, good point there. So yeah, definitely don't chase some of the cloud computing plays unless it really is warranted by the fundamentals. To wrap up, another area that people were chasing a little bit on Tuesday, Electronic Arts, the stock was up before earnings because of a Facebook 5-year deal. Then the earnings came out and people realized, oh yeah, EA still has problems. Is that something that you would be looking at as an opportunity in EA right now just because of the Facebook tie? Or should people really not be so silly to say, ooh, they have a deal with Facebook, then they must be a great stock?
What's going on with Electronic Arts is a transition away from retail and box to basically, simple delivery of software over the web. They've got a lot more transition ahead of them. Facebook's a good step in the right direction. But the shareholder base is owned by people that just don't understand this new era of delivery of software, and that Zynga, a private company that surpassed it in market cap, it's really hard to believe is a 4-year-old company.
Yeah, it is amazing, and yeah, I think that's a great point to wrap up. The console may not necessarily be dead, but it's certainly not a hot business right now, so EA probably is something to steer clear of.